The USDA has released the latest WSDA numbers, and here to break those down, Kim Anderson, our grain marketing specialist. Kim, let's break down some of the commodities, and let's start with canola. What's the news there?
Well, if you look at canola, Canada just had a large canola crop. Canola prices, and let's just look at the forward contract for next June. In the last 2 months, it's went from about $9.85 till yesterday. It was $8.95. So we've taken around 90 cents off of that contract in the last month. The crop looks really good.
All right, what did we learn about soybeans?
Soybeans, that's been the bright spot in the grains. Soybean prices have been going up for the last 6 weeks. We got a positive report on that. Higher prices, the soybean stocks lowered to 150 million bushels, 20 million bushels lower. We have resistance on that soybean contract, the January contract at $13.53, and support at $13.14.
All right, of course, we always have to ask about corn. That's a big crop for us. What's happening in corn?
Well, corn, we had a positive report there. We had a 50 million bushel increase in exports, a 50 million bushel increase in ethanol, a 50 million bushel in seed, food use, like that. Ending stocks were lowered just right at 90 million bushels. And in the corn contract, the March contract, we got support at 418.
All right, so now, of course, the crop everybody in Oklahoma is most focused on. Let's talk about wheat.
Well, not much changes in wheats. I think the USDA increased ending stocks number by 10 million bushels to 575 million. And you can compare that to 718 last year, or 7 million bushel average on a 5-year average. They increased Argentine production by 10%, Australian production by 4%, Canadian production by 13%. Overall, ending stocks in the world, they increased by 2.5%. Of course, wheat prices went in the tank, dropped again. That March contract does have support at $6.73.
All right, now let's talk that world situation for wheat versus the U.S. situation. There's a little bit of difference there.
Yes, it's stocks are relatively tight in the United States. We mentioned total wheat stocks, but you got hard red winter wheat ending stocks less than 200 million bushels. They were 325, 330 last year, so very tight hard red winter wheat stocks. But you look at the world, we talked about the increased production in Argentina, Australia, Canada, and those are competing countries. So the world ending stocks are just 2 or 3% below the 5-year average, more than abundant world wheat stocks. And right now, the world stocks are trumping the U.S. Wheat stocks, and prices are going down.
All right, so how is that going to affect our price for harvest next year?
Well, with the tight U.S. stocks, that puts us on a teeter-totter where it's just level out and you don't know which end's going to go down. If we have a short crop in the United States, then we could get a relatively good rally out of wheat prices. But that big world stocks is going to be like an albatross hanging on your neck, pulling prices down. If we have a big crop on the other side, we can get a significant move lower. So we got a pretty wide range. I've been predicting $6 for next June. I'd probably, it's possible to be down to around 5.25, or it's possible to be up around 7.5, 7.75.
All right, good information as always. Kim Anderson, our grain marketing specialist here at Oklahoma State University.